Well, we're also tracking shares of Oracle this morning, ORCL. That's the ticker symbol. You see it loaded up there on your screen. It's down 7%, taking a hit this morning after the company's fiscal second quarter earnings fell short of Wall Street's expectations here. Our next guest remains neutral on the name. With a $150 price target, Gil Luria of D.A. Davidson, who is the senior software analyst, joins us now. Gil, great to see you. Just want to get your overall sense and read through here on Oracle and why the street is sending shares lower here this morning.
Yeah, Oracle has been promising for a while that they're going to accelerate to double-digit revenue growth. And while that may still come, they keep pushing that out. They grew single digits again. And let's not forget, for Oracle, it's a mix. They're growing the cloud businesses very fast, but about 60% of their business is still declining. So it's a cloud transition story that should be accelerating. It hasn't quite yet. And then the other very notable thing is that their CapEx is going to double this year. It's going to be more than 25% of revenue is going to go into CapEx. So the very, very high investments that are not yet translating to revenue acceleration.
Gil, do they need to ink more of these types of larger deals when it comes to Meta? There was a lot of excitement surrounding that, but it seems like, at least looking at the quick reaction here this morning, maybe we're not going to see that big of a spike, and there's more pressure to ink similar sort of large size deals here in the future.
So Oracle has large deals with most of the hyperscalers and Meta, really for spillover, right? The mega caps, Meta, Google, Amazon, Microsoft, are having a hard time building data centers fast enough, and so they're signing these spillover deals to Oracle because Oracle has been very efficient at building out these data centers, and again is doubling its CapEx spend in order to do that. That's good news in the short term. That means Oracle is going to get these big chunks of business. But if you look a little past the horizon, you start worrying about the fact that when those big players have their data centers built out, they may not have as much spillover for Oracle.
You know, Gil, I had a little bit of a drinking game going with this earnings call, and, I ended the day pretty sober because I didn't get any mentions of nuclear reactors, which I've been geeking out about a little bit here over the past couple quarters. There were no mentions of that, but what more broadly do you think some of the CapEx that they're talking about, even if they're not mentioning nuclear reactors in this most recent earnings call, where is that CapEx really going to be thrust towards, and what is the return on that investment and the timeline that analysts and the street should be grading Oracle based on?
Yeah, that's the right question. So building out data centers is very hard. There's the element of getting the land, getting the energy deals, and then you have to build this data center, at which point you put in the servers with the chips in them. That's a long lead time business. And since there's such a competition for that land and those energy sources, we are running out. So we will need alternative and new energy sources. And it's become very popular these days to talk about small modular reactors and how those are going to fill the needs. The thing is, those take many years to build. And so even if we decide that we're going to build a lot of small modular reactors, we're many years away, 4 or 5+ years away from getting those online to power those data centers. So for now, we have to make the most out of existing energy sources, which is one of the bottlenecks to the build out of data centers.
Gil, what about the TikTok situation here for Oracle? We didn't get much commentary at all, actually, about that when it came to the conference call. How big of a hit? What ultimately does that mean for Oracle here in the longer term?
They haven't quantified the size of TikTok, but given what we know about TikTok and their volumes, they might be Oracle's largest customer, or at least one of the largest customers within that Oracle cloud business, which is the business that's really dragging all the growth behind it. So it could be a pretty decent hit if they lose that TikTok business. What they're saying is, no worries, we have the demand for that data center capacity that we can fill in. That's why growth hasn't accelerated yet. But either way, if that revenue goes away, it'll go away quickly. If TikTok is banned in the U.S., then yes.
Gil, sorry to jump in there, but I guess how confident are you that that's actually going to play out that way? Oracle might be saying that it is confident that they are going to be able to substitute some of that loss in demand, but how realistic is that?
It would take a while. There'd be a gap. There'd be a 1 quarter, maybe even a 2 or 3 quarters of a gap between when they lose the TikTok business, which again could be as early as January, and when they fill it with new demand. So that would be a hit to them. It would be a benefit to Meta, Google, and Snap, but it would be a hit to Oracle.
Gil, it seems like the word agents is the, at least ERP or CRM landscape's favorite new word when it comes to AI and how they're going to be going out to their customers here. For investors trying to figure out how they continue to monetize that and then the pricing power, how long of a runway do you think they have in this pricing power for a lot of the agents that are being talked about at this juncture and really just being experimented with at this point in the cycle?
Yeah, for now, that term agents is mostly marketing fluff. These tools one day will be very successful at helping us automate tasks and carry out tasks for us, eliminating a lot of manual labor. We're pretty far away from that. Right now, we only have anecdotes and niche use cases that are pretty limited. So for now, it's a lot of marketing fluff. Really what we're saying is, instead of a co-pilot, something that, let's say, pre-populates an email for us before we edit it and send, we're talking about tools that will read our emails, write the response, and send it without us ever seeing that. I'm pretty sure I'm not comfortable using that kind of tool yet. I'm pretty sure most people in most companies are not comfortable doing that. So for now, it's mostly marketing fluff.
And Gil, looking ahead to the rest of the week, we're also going to be hearing from Adobe. We'll be hearing from Broadcom. I guess how much of these themes do you expect to be carried through to those reports, or when you take a look at those businesses, specifically Broadcom, some of that outperformance we've seen there, is that going to maybe buck some of this downward pressure?
So I'd say expectations from Adobe are pretty reasonable. They just need to execute, continue double-digit growth, continue a little bit of margin expansion, and there should be some relief there in a similar way that we saw from Salesforce when they reported. For Broadcom, a lot of the story is that the data center build out, a lot of it has to do with the custom chips that Amazon and Google are making in order to populate these data centers, and Broadcom is helping them with that. So they are actually helping with the great data center build out, and they should continue to benefit from that, especially since Amazon and Google aren't getting enough NVIDIA chips, so they really have to fill a lot of that demand with their own chips.
All right, Gil Luria, as always, thanks so much for taking the time to hop on with us here.
Thank you.